We do expect demand to slow down next year on the back of the macroeconomy slowing down as well. With that, we expect supply to follow suit and growth to slow. And of course, these OPEC cuts have been critical to supporting, or trying to support, global oil prices for Brent. And really, the OPEC cuts were very critical to getting rid of the oversupply that we saw in global oil markets leading up to the announcement of Iranian sanctions waivers. Once those waivers were announced and OPEC decided to cut given the oversupply, we really needed prices, and we really needed to support prices and for balances to sort of come back in line. The OPEC cuts successfully addressed the oversupply situation, and we come back to a sort of balanced market for 2019. Now, having said that, in the first half of the year, we do expect seasonal builds. They are seasonally normal, and that's part of the seasonality that we see in oil markets. And so we do expect prices, Brent crude oil prices, to be in the low 60s or so for the next few months. Then we watch for the second half of the year when we expect tightness to return. Seasonally, demand will rise. And we also see geopolitical risks coming back to affect prices.
So 60 is only a couple bucks or a few dollars from where we are now on Brent. Does that mean that WTI remains here? And are we going to see any sort of, I don't want to say cataclysmic, but sort of a forced market correction when it comes to oil production here in the United States? In other words, is this low WTI price going to force some producers to scale back, to force them to face some credit issues, et cetera, things that will make them ratchet down the supply?
Well, listen, currently prices are certainly struggling with the bearish sentiment that's taken over, and we're struggling to lift prices and find support at these current levels. But remember, through 2019, we expect U.S. shale production growth to slow. Pipeline takeaway capacity constraints are going to cap production growth, and we will expect the growth numbers to slow down until the fourth quarter or the end of the year, when we expect pipelines to come back online, to newly start up, and that will help move the barrels out and get volumes where they need to go.